Hello and welcome to Macro Mondays here on Landy's Crypto Corner, powered by the Goxstein News Network. Today is June 2nd, 2025, and last we spoke, it was nearing the end of May. So we are going to be covering the monthly today. Going to take a look at the May closure and, address some of the immediate concerns that a lot of people have, and what to kind of watch for over the rest of this month coming into the end of the quarter. Now, for reference, I do have the monthly kind of pulled out to two cycles, including, of course, this current cycle. But we have the prior two cycles, the 2017 high to low and the 2021 high to low. And the reason that I bring this up is because I want to show and illustrate how important the bands are in my analysis, and kind of what some of the similarities and differences are in what we're seeing right now to the prior cycles. So what I want to do is pull up, not this, we're going to actually go and not look at RSI. We're going to take a look at BBWP, which is by a brilliant developer here of indicators by the name Caretaker. Sorry, today's been a long day. Been talking all day, so you have to forgive me for a little bit here. But I think it's important to understand kind of where we are, and you'll kind of note I have BBWP. Caretaker allowed me to pilfer some of his code for a few things as long as this indicator is free, and it is. And the big thing that I'm going to note about this is a volatility metric. You don't need to be a Bollinger Band expert or really into it. I do suggest that many of you that watch my videos maybe go and take a look at what John Bollinger created with the Bollinger Bands and kind of how it works. I use a triple set. He uses 2 standard deviations. I use 3. So I use the first, second, and third standard deviations to the upside and downside, away from the basis band, which is a 20 simple. And the BBWP metric is a volatility metric relative to the Bollinger Bands. It represents volatility both within and outside of the bands, but essentially as we get price rises from the basis, when the bands are in a contraction phase like this, we get volatility expansion. In this case, we still have volatility expansion to the upside in the bullish half of the bands here. And I want to kind of compare that to last cycle. So, the big narrative as of the May closure is, well, the sell in May and go away narrative. And many are comparing this particular swing of the 109,360 high over here. And let's see, yeah, that was the high, 109,360. Many are comparing that to, what happened in 2021, where essentially we were trending outside and of the Bollinger Band's upper second and even upper third standard deviation. It was very, very volatile. We had the first top come in, higher low, came up, spiked the upper second, swung the all-time high, did not close above the prior $65,000 all-time high. So got that $69,000 swing, back down, tried for a higher low, did not complete, and then went right into a lower high, bear market start. That's officially, by the way, the bear market start. Everybody's like, well, the $69,000 was the bear market. No, it wasn't. It was a higher high. And when it tried to put in the higher low and failed that March into April of 2022, that was really, that was kind of the nail right there. It wasn't even confirmed until, of course, May. But we're not in that same structure. And in fact, when comparing volatility, well, this could very well just be a swing of the highs, and maybe it goes in, it tries to take out the low at the 74, 420.69 there. Well, that's very possible. That's not the same look that we're getting from a lot of other indicators. Now, there's a very good bear case to be made, but there was also a very good bear case to be made back here, and it didn't play. One of the main reasons why it was so far away from the last higher low that it would have had to make another higher low no matter what, and either fail the high at 73,835 over here and then take out this higher low at 49, and then that would have been, a trend break on a macro time frame. Those are pretty concretely going to shift the market. Not always. And in a maturing market where we have, a lot of institutional players these days, we're going to see some different things, an evolution of this market, if you will. And in this case, we're back in a compression. And I wanted to kind of note, I had somebody ask me about this that is familiar with Bollinger Bands. Said like, well, we were going into a compression when we hit this high. And technically they're correct, but I want to compare this to where we were on BBWP. When we made the all-time high at $69,000 in the prior cycle, volatility was cooling down. Yes, we had the lower first starting to move up. That's the most obvious thing. We had the spike at the upper second standard deviation, which was right at $69,000, kind of where our area was at the time. If you were watching any of my stuff at that particular time, I was looking at 68 to 70 where the upper second was. And, kind of like looking at the 112 region that was just hit on the high, that's exactly where the upper second standard deviation was. Now, it does show a little bit of a swing above, but it adjusted while the May candle was still open, and of course has since adjusted again because we had the closure of the May candle. But in this case, what we saw was not the same type of a look. We started to go into the compression around the basis band here. And then you see BBWP cool down, so volatility cool down as we came back to the basis, and we got our actual expansion in this case to the downside. And this was the first ever expansion in Bitcoin's history on a monthly time frame to the downside. We hadn't ever seen that before. It was something that I was warning about at the time as we put in that lower high. Is like, hey, if this breaks the basis band, the traditional markets look like they're going into a bear market as well. I believe they were already, looking quite weak at that point, and that, they were likely going to keel over. We did see that. We saw the same with the lower high after failing to put in the higher low. And then, of course, the big warning was in April. It was like, hey, this is now a red candle or a bearish candle below the basis band. Very likely going to take out the last higher low swing. It did. And there was a lot of front running of this anyway on the weekly. The weekly can tell us a lot, and that's kind of what my point's going to be by the end of this video. But let's get through the rest of this real quick. We got the first ever expansion to the downside, and then coming out of the bear market into the bull, right? So we had our expansion right down. We peaked on expansion right down here, crossed over, went into the bull market structure or setup with some higher low structure here. And we saw that we were in a cool down phase. So we actually were in a cool down phase, much like we were back here. We got our expansion up. That was our first expansion. And we've been actually compressing ever since while making higher lows and higher highs, of course, as well. Now, this is very different than prior cycles, and many are expecting this to break down. I don't think that that's something that I can say right now. We're starting to see the etchings of expansion right here. Now, this is unconfirmed as of yet. With the way BBWP works, we need to see one more tick. How will we get that next tick, and where would it come in to confirm what would normally be considered upside expansion? Well, there's a few different criteria to confirm this. Above the upper first standard deviation is going to look better, and that's at $94,000 right now. And that's where, excuse me, I touched the microphone myself. Hold on one second, sorry. But the big thing with this is, in order to really kick off expansion to the upside in this case, we need to see Bitcoin close not just above the upper first standard deviation, but we now need to see like true expansion above the upper second, which would put Bitcoin above its all-time high now at 112. And that is going to be at just about 114. Likely, if Bitcoin remains green during this month, that'll fall somewhere around 115, 116. Especially if Bitcoin is accelerating towards that. So in order to kick off expansion again or re-expansion to the upside, the easiest way to identify that just on the bands alone without even the volatility metrics, which are giving just a preliminary confirmation of volatility expansion as it relates to the bands, because Bitcoin has pulled off its move to the upside off the higher low and locked in a higher high monthly close with a higher high swing, and solidified this closing low. So this is the last major low, right? So it's a higher low, just like this was the major higher low before it. This is now the most recent major higher low. It is now confirmed on a swing, which was done back in April when the candle closed green. It did not solidify the low until May here, which now has confirmed not just the swing low, but the closing low structure. What we need to see is continuation above 112 that also closes above the upper second standard deviation. That would confirm expansion again. And this is coming from a decent compression phase. In fact, this is the lowest volatility level that we've seen since May of 2020, moving into like the August-September timeframe, like right on the edge of, moving from September to October, like somewhere in between there for the close. So if we look right there, it's going to be about October is right where BBWP volatility metrics are. And in this case, that would indicate a big move, like an actual really big move in Bitcoin to the upside. Doesn't mean that even if it confirms it, doesn't mean that it's necessarily going to get that big move to the upside. You need to see close over close above the upper second to really like bake that in and get that move started. But that move's going to basically confirm initially above the upper second at, I would say, 115. And of course, that would be closing above the prior high. We're in blue skies. We can start, targeting at and above the upper third, even at $135,000, which would likely move to like around 140 if we start to see closures above there or price move above there. Probably going to see that, anywhere between 135 and 138 initially, if it does happen, to that 140 on and higher on any kind of close for this June candle. Now, there is some things to be aware of on the monthly time frame when it comes to a few other things here, just really quick. The bearish divergence already played out. This correction is done. So we do need to be aware that even on subsequent higher highs that we're going to get more and more bearish divergence. And I'm looking at in-trend bearish divergence. We have a nice uptrend off of the bear market lows. Yes, there's going to be bearish divergence from the prior cycles. That is not the most pertinent type, right? It is going to be the in-trend bearish divergence in this case that is what we need to watch. And that's where we got to be very aware of what's going on with RSI here on the monthly time frame. See, bull critical zone is the 80 read. We haven't seen that this cycle. That's a pretty hot read. That's at about $158,000 on this current monthly candle. This will update next month as well. So at the close of the quarter and the close of this monthly, we will see that update. So that's on the high side. Exiting the bullish control zone is going to be on any closes below $93,000. And I do want to point out that $93,000 doesn't really do much in this structure for the monthly, but that would be pretty significant on the weekly. But, that's not something really relevant to the monthly as it stands right now. It's something that we'll track on a week-to-week basis if it does begin to happen. But realistically, the line in the sand is 74,420.69 on a swing and 82.5, just over 82.5 there at 82.534 on the close open. That is what we have to watch to the downside should we see a significant correction from the current highs without any, of course, continuation above the areas of interest that we've talked about for quite some time. Now, when looking at, RSI, if it closes anywhere, we start seeing highs put in anywhere below, and I mean a full painted closing high, anywhere below 158. We would be looking at, we'd be looking at some more bearish divergence populating. Obviously, if we got another high right here, we still would see, of course, any kind of a higher high painted like this. For instance, if we see a close below the May open at 93,363, we would also see another bearish divergence populate, right? Lower on RSI than we were at the 109,360 and the 73,835. So that is some stuff to be aware of. Obviously, we see momentum. We would also paint some divergences. Momentum pivot for the monthly is going to be, let's see, 103.6. So we need to see closes above there by the end of the month to keep momentum turned to the upside. Yeah, many remember the spooky ghost that we were drawing last cycle. But yeah, that's kind of the monthly outlook. I would say bulls need to see continuation and do not want to see this turn into a high. That would be a second bearish divergence painted, and that's going to come on any closes again below 93,363. That would start to paint the picture, by the way, if we did see something like that, even if it hadn't hit this low down here, but it would paint the picture that we're likely going to see a move towards this last higher low. And then we can talk about what happens from there if that is the case. Until that happens, all of the fear that you're seeing on the timeline is unwarranted. We can track it week to week. And that's where I do want to look at the weekly real quick here and kind of address a few things here. So we have all of these highs on the way up. In this particular structure, you're going to see that going back to the 73,835 to the 109,360 and many other highs along the way, you can see kind of where we are in the RSI for the weekly. This obviously is a higher high. We did not get a confirmation of a closing higher high yet. We just have Bitcoin kind of hanging around the upper first standard deviation. You might remember on Friday I had mentioned that any closes coming into the weekend below 102.1 would paint another higher high with a lower high on RSI, which would be another drive of bearish divergence. But that'd be, at least initially, because this is a trend break, that would be corrective at first. I know that it would be very significant to some, as we do see weakening RSI across the board, all the way back from last year's halving. You got to give it a chance, because the most likely outcome of this structure here, on anywhere where the next high is painted, is very highly likely going to be a higher low. That is the more statistically probable outcome. And then we gauge it from there for lower highs, and then wherever that higher low is, that kind of thing. If that's the more statistically likely play, if it were to put in a higher low. Otherwise, it's a deviation of this downtrend here, and a big one at that. You don't usually see a move to new higher highs on a close and swing, and then take out the last lower low when you see a trend break like this. Usually, you'll see a higher low, and then you gauge from there for actual confirmation of a trend shift. So something like this. And then you gauge from here. This would be your higher low trend reversal setup, and then trend reversal confirmation would be back above 112. That is provided this puts in a closing high, and we haven't seen one yet. I'll give you the criteria for one in just a moment to watch for this week and in subsequent weeks. But the trend reversal confirmation would be then closing above the 112, right? Otherwise, it's very, very rare to see something like this, where we just get a giant trend breaking deviation that also swings and above the prior highs and even closed inside of them. So I guess that is a little concerning for some, but usually closing on new higher highs and swing highs, you don't see a direct takeout of the lower low when you're looking at trend shifts. Typically, if you're going to see this play out bearishly, what you would see is something like We come up here, we get the higher low, and then we get a lower high, and then takes out the last higher low. So this would be your bearish right here. That would be kind of your bearish setup. And that would be the concerning one for bulls. That would definitely freak a lot of bulls out. And, you know, I would definitely be bearish, that's for sure. So there's two bearish scenarios from here that could potentially play out. But the more statistically likely one is a higher low no matter what, right? So that's kind of the point. The less statistically likely one is go from higher high to lower low. But it still has significance. So it is something to pay attention to. Should we see this high paint? Well, when will we see this high paint? If it's going to paint from here, what we need to pay attention to is actually now last week's low. Any closes below here and the upper first standard deviation at 103,100, so $1,000 above the prior, the prior week's low at 102.1. We now have 103.1. If we see a close below here, this would be a high on a closing basis, not just a swing high that was set with last week's bearish closure, but it would be a closing high with another drive of bearish divergence and likely lead to a wider correction. Obviously, got to get past the wicks at 102.1 and that 100,700. But we'd also be playing within the upper first and basis band area of volatility, somewhere around 94,000 to this 103 by the upper first, which you saw price bounce off of on this last Monday candle. Or it's still Monday for me, but the Tuesday candle's open. And it's something just to keep a close eye on. There is a legitimate bearish case, so bears aren't crazy, but it's also not confirmed, and there's still plenty of time to figure out which way things are going just by watching day by day and week by week, and then especially the end of the month, end of the quarter. And I do want to address this real quick today. The quarter is kind of what's making me go, while bears might have a bearish case, this quarter is something to behold. Now, obviously, this is going to be closing in 27 days and 23 hours with the close of the monthly candle. But, you know, it's not bearish, not bearish by any stretch of the imagination. The other thing that I wanted to point out here, and I don't know, did we get it on the monthly? Let's look at that. We're going to have a 2-month. Yeah, 2 months going to close as well. So the 2-month is the other one that I think is interesting. The quarterly, obviously, we got to wait on. You want to see continuation above 112 this month. That would look really good for the bulls. And then we're starting to get into the 124, 125 territory and above. It is actually the 2-month, I think, that's interesting because we're going to have, obviously, the monthly 2-month and the 3-month as well as a 6-month. And these are all very relevant, but let's cover the 2-month here. This is actually in a confirmed Bollinger Band expansion, but compressing between the upper first and upper second. And that's painting kind of a neutral picture right now. And in this case, we need to see a close above 105, 100 by the end of the month to start getting re-expansion to the upside. Let's go ahead and look at BBWP real quick. I think that's going to be an important thing to pay attention to. Yeah, this is not pointing towards immediate expansion, which does tell me that even if Bitcoin does leg up above the highs, be aware around that 132 region that you see up there. And obviously there's some major fibs that we've talked about from the prior cycles, around $128,000 by this 1414, and that is where we have 41.4% above the prior cycle high here when taking a log scale fib retracement on extensions from the high at 69 to the low at 15.5. So, and I know this video is running a little long, but you know we have a lot of significant things to pay attention to this with all of these closures. And the bigger one towards the end of the month that I'll be talking about towards the end of the month is actually the 6-month time frame. And we'd have to go to let's see, the Bitcoin chart and go to index for this one. And this is where yeah, this is not bearish on the 6-month. This is actually quite bullish on the 6-month. So the other thing about the 6-month is this is really and truly going to be the first real expansion in BBWP volatility that we've ever seen. And we've already seen it kick off. We got a little bit of mean reversion of volatility as it kind of chopped around slowly around this upper second. But closes above 86,242. Pretty significant. 115 right overhead for the 6-month. Any closes above there going to significantly increase the BBWP on a 6-month time frame. It just takes a long time for the 6-month to play out. And for the weekly, we just got to watch this weekly closely. For the daily, we're in that downtrend that I spoke of. Held on a close open, literally right at where we were looking, 104. Nothing too crazy. We've talked about this quite a lot, actually. After the 101 to 104 region was breached, it was the highs at 106 to 108. If we manage to close above the high, then it's that 109 to 106 on the way back down to pay attention to, right? And we saw last week, obviously, when this when this area held up coming into last week and then failed right around 106, put in that lower high. And then, we talked quite a bit about, on the Wednesday check-in, if we start to lose that 106, the next big area of interest is going to be 104 to 101, and pay very close attention to this low on the daily at the 100,700. You can give it room to swing, but realistically, any closes below there, targeting around 98 to the top side of this consolidation here at 95, bracketing the point of control for volume of this structure and even the current structure moving up. So, and that's at $96,000. But anywhere below there, we're looking right back to the weekly high or low at 93.5. And that's going to be a very, very key area. If price does start to fall out of this current zone between the main support area of interest between 101 and 104. This is also where the 1272 is, or 27.2% above the prior cycle high at 69K. So this is a really, really big inflection point for Bitcoin in terms of price action. Trading back above 106, very good. Needs to recover above the basis, which is slightly above there at 106.675. So 106.7 would look really good to go and test. 109 again by the upper first. Anywhere above the 109, especially the 109.360, then we could potentially see a trend break back to the upside. So we have a trend reversal setup, lower high, lower low, but if it breaks back to the upside on closes above 110.830, then I'd be looking for that 112 as the possibility. Any closes above there and the upper second are going to kick off re-expansion. So we see that we have a bit of a compression going on here. We have fairly low volatility. In fact, this could go either way. Because of where volatility is positioned, this makes this really easy. As the bands are going to give us our edge here. Any closes below the lower first that take out this last lower low. Lower first is just above the 104 region, coming in at 104.4. Any closes below there, and the last low here at 103,100, which, by the way, is where we would see, if we are talking about towards the end of the week, where we would see a higher high actually painted on a close if we see any closes below here as we come into this next Sunday. That would start to look like, hey, we're going to come down and play around this lower second at the 102.1 to possibly 100 and test this area down here if we haven't already, around that 100,700. We start seeing any closes below the lower second and 101. We're either testing 100,700 or we've already broken it and started expansion to the downside towards the next area of support right around the high side structure, 98. You can take 98 to 97 here on the highs. So 97, 98. Anywhere below the point of control at $96,000. Keep a close eye, even in lower term time frames, on the top sides of these candles, somewhere around 94, 95. If that starts to fall apart, then we look towards the weekly at 93.5. Anywhere below there, bottom side of the range. This is the original range up here that Bitcoin did recover and bounce from at 92 to 88.7. That's the line in the sand for the daily there. The weekly still would have room to wiggle and maneuver, as with the monthly, but it's going to start to paint a very bearish picture if it starts to close under there on some higher term timeframes over time without recovering, right? But in this case, we can also see to the upside, any closes back above, the 109,360 in the upper first, we're going to be testing the highs. So any closes back above the highs, this is easy. This is expansion to the upside. Blue skies looking 112 to 115, 115 to, 118, I would say, in lower term time frames, and then 118 to 122, 122 to, the 125 that we saw on the upper second. And that gives us then the possibility of testing up to about $128,000 to $130,000, maybe even above on a swing, right? We saw the 135K as one of the key areas up there as well. On the monthly now, by the upper third, that would likely start to stretch out intra-month if we did start to see a breakout this month. So that's going to be what I'm watching. I'm going to give you a little hint as to what I'm using as some outside metrics, and this is just very simple. I use a lot more than this, but in traditional markets, currencies and bonds, I'm keeping an eye on the bond market. We saw another bit of a sell-off here on Monday. This is the ETFs for the corporate bonds. This is investment grade bonds. This is the iShares ETF. Yes, it's BlackRock, but you might as well track it. This is for your investment grade, your high yield grade. And then we have IEF, which is 7 to 10 years. So it captures, the 10 year in here, and TLT, which is the 20 year. There's others that you can add to this where there is some wrap products. It just gives me a quick view of the bond market for both treasuries here and the IEF and TLT. And then corporate bond markets with the LQD and the HYG here. So our investment grade and high yield bonds. And what I'm looking for, and what we just saw in the early goings of this week, and a little bit last week, we actually saw a nice buyback, believe it or not. That's actually not looking too bad. Although U.S. Treasuries did sell off, and it is another lower high. What we're seeing is money. We're seeing a sell-off in the bond market. Obviously, yields go up for Treasury assets. And we're seeing corporate stay pretty steady. If we start to see the credit spread lean towards the corporate side, that's more of a risk-on environment. That would benefit crypto in general, and might lead to things holding up well. Obviously, if we saw a kind of a drawdown in both, which means that we're seeing a little bit of caution being exercised right now. And we have to monitor this closely as it relates to traditional markets as well. So, I'm watching futures pretty closely. Could this be a top on S&P? Maybe. It's consolidating. It'll paint a high, anywhere below 5,800 or so. But we would still have to give it a chance for a higher low structure and see where it goes from there, even if it did. Otherwise, maybe it's a consolidation. We start looking back towards the highs again. This was just mean reversion, but it did get over the basis band, which is really good. At that 57,773 here, where the basis is, that's a good area to stick above. But anywhere below there, highs painted, likely going to correct pretty hard down to at least 55, maybe lower in some lower term time frames. But that would be the initial move down, and still have to look for higher low structure from there. But give it a chance. I would ignore the FUD and watch the charts. Charts have all the information you need, and they, you can't. I can't in good conscience roll with the whole, this looks just like 2021. even though it does upper second standard deviation strike, just like back here where we had two strikes towards it and then a failure. Even then, even when I was going short on some of the weeklies and dailies up near the highs, because, we were looking at a potential bearish scenario, there was no like, hey, this is definitely going into a bear market. There was a lot of signals there, but it wasn't until we actually saw the failed higher low to lower high breakdown point that it was like, okay, it's good to go. Ride these swings all the way down, I guess, right? And yeah, we're not looking at the same thing right now, and we have to wait to see if we will in the future here. So give it a chance. Bitcoin has a lot of bearish things that are starting to populate, but there's just as many bullish things on the other side, including continuation drives of bullish divergence and stuff like that, which we can talk about a little bit later this week. I want to see how the rest of the, how the Tuesday session goes into Wednesday, and after close, I'll be back here for the Wednesday check-in. I know this was a longer one, but it was, it's important. We have a bunch of major timeframes closing from, the monthly, 2-month, 3-month, and 6-month, all occurring this month around some economic data that is also going to be coming out. We had a little bit of it. I'll talk a little bit about PMI stuff pretty soon on Spaces, and maybe even here in the recorded video format. You have a wonderful morning, afternoon, and evening. No matter where you are in the world, please trade safe. And of course, as always, stay safe. With all of that being said, Landy out. Take care.